Okay, small difficulties there. All right, hey, what's up? Okay, so this is a response to a question that was asked in the Discord asking about how to use the Fibonacci sequence. And the problem that we see online is that individuals use the Fibonacci sequence, but they don't use it in a way where you're looking at past data or using it to analyze future data, is what I'm trying to say. Most people will use it to measure out the current data and explain how it works. First off, I'm going to give you a brief synopsis on what a Fibonacci sequence is. It's like the universal numbers. They're the sequence of numbers that equal perfection, and they use it in design a lot. If you look at Aston Martins, if you look at the design of chairs or anything that is pleasing to the eye, the Fibonacci sequence is typically used. You can see it in a lot of art pieces. Yeah, the Fibonacci sequence is also in nature everywhere, in leaves and flowers and everything. It's a very interesting sequence of numbers, and it helps us kind of it gives the universe kind of like a guide on kind of how things flow. It's like the flow of the universe. And the same applies in the market because the market is the flow of individuals' emotions. And you can apply that same Fibonacci sequence to the markets. And I'm about to explain and show you how that works. So the Fibonacci sequence allows you to figure out pullback points where the market is going to retrace and whether if it retraces past a certain point, whether it'll continue to move in that direction. So typically, I'm going to explain these numbers. I'm going to break them down for you. So we have Bitcoin here. Everybody loves to look at Bitcoin, or Bitcoin's a hot topic. So I decided to use crypto. And everybody's always trying to figure out when is it going to pull back? When is the bull run over? When should I get out? The Fibonacci sequence will help you determine that. And I'm going to show you how. So, for example, this is how you're going to use it. You want to start, the starting point always has to be at the beginning of wherever the run started. So for example, if we were measuring this bull run from here, and we were measuring it and following it. So say we didn't see any of this information here. We're looking at it from the 2021 in January, and we made this high. We would have marked up the Fibonacci, and we would have wanted to see it not break below 50%. 50%, that's telling you most individuals have sold. 50% of people have now sold Bitcoin, and it's most likely going to collapse. Anytime it hits that 50% mark, you're going to want to start looking for a pullback or a reach the market to shift directions whenever it hits that 50 point. So 50 point, that 50 point, you're looking at the market to switch directions. If it stays above that 50 point, 38%. So where are these numbers coming from? I'm just spewing. This 0.5, this is 50%. This 0.61, this is 61%. This 0.78, this is 78%, and so on. So this would be 23%. This is the Fibonacci sequence, 23, 38, 0.50, 61. It's the sequence in which the order of the universe kind of flows. And you can apply that to a lot of things. Like I said, art, um, it deals with design most of the time. So art, cars, photographs, uh, even this chair, anyways, and so forth. So we're looking at this, say we don't see any of this data. We're watching the bull run from 2021, and we see it makes this high. It pulls back to that 23% range. Some people would be asking, oh, is it going to collapse from here? Is it over? Well, it wouldn't be a definite yes until it goes to like 0.61%. But once it hits 0.5, you should definitely be looking at getting out and looking at, securing your investment. And if you can short the market, go ahead and look for opportunities to start shorting because we have hit that 50% that 0.5 on the Fibonacci sequence. Now, as you can see, it didn't drop below even 38% on the Fibonacci sequence. So we would move this up. We'd continue moving it with the bull run. Now here, we hit its peak here, and it dropped to what? It dropped to 0.5%, so 50%. So now, at this point, say we're watching the bull run, we marked up our fib levels, and this is on the daily time frame. That's what typically where you want to do it on, especially with crypto, because you want to look at the the big picture. You want to measure that. And we can see with crypto, it created this high. So let's imagine we're not seeing any of this yet. Created this high, and then from that high, it dropped 23%, 38%. And then we hit that 50%. Now, 50% of people are now selling right now in the market. Does that mean it's going to immediately collapse? No. But what did I say? You should be looking for that reversal to start happening. So it hit that 0.50, and individually, obviously, it took back off. But like I said, now that it's hit that 0.50, now we're looking okay. The bull run is most likely over. If it does retrace, it's probably going to retrace to, say, 38% or 0.23% and pull back down. Now, what it did was it pulled to 38%, and then it broke through that. So there was good momentum. Then it hit the 0.23%. And you can see it pulled back down. And where did it pull back down to? 0.38%. Why does this work? I don't know. I don't know why these numbers correlate to so many things in the universe, but these numbers, they do. And we follow it to a T. And you can see the market also follows it. And that's why people praise the Fibonacci sequence. The only problem is most people don't know how to utilize it properly. So it kind of, gets undervalued or just explained in the wrong way. And it's not a definite like, oh yeah, it's gonna, but it's just it's a tool to help you analyze the market better and understand what individuals are thinking and how the market is flowing. Anyways, as we can see, it pulled back to 0.38%, and then it shot way up, all the way back up to its previous high and broke that high and created this new high. So now we would mark our Fibonacci sequence all the way up. But remember, we still had that moment where it dropped to 50% here. And we can't forget that. That happened. And whenever that happened, you got to note that down. You got to understand, hey, at one of the peaks, the previous time it was at this point, people sold, and 50% of people sold. So we can only assume that's most likely going to happen again. It just reached that price point. We're looking, okay, it's either going to break above it and then we'll be okay. It has to break above it, at least 23% above it. But you can see the Fibonacci sequence doesn't work that way any higher than that. So you would have to just, you would use other tools. Tools like, and I'm going to show you, indicators. Indicators, this is a math formula, and it was created, I can't remember the date. I think it was in the 60s, I believe, or 60s or 70s, and it was used to analyze the market. I forget who made it. I forget his name now. Great trader. Anyways, he created this this indicator. It's called the parabolic SAR. So if we add that on there, we'll get into this a little later, but basically this shows you the momentum of the market as well in a different type of way. So if we zoom in on this, let's see. Sorry, I'm a little trash with let's imagine we don't see any of this extra data and we're watching it. We want to see this parabolic SAR, these dots, stay below price. But as you can see, it broke below price here, and the dots flipped. Basically, the way you would use a parabolic SAR, one of the ways you can use it is as a trailing stop loss. And anytime it flips, that would be your indication to enter. So for example, say here it flipped and say we entered here, we would use the bottom, the parabolic SAR. We would use this as our stop loss and we would keep trailing it, trailing it, trailing it, trailing it until it gets hit here. And this is where we would exit out of that trade that we entered at this position. You get the point. We'll break it down a little more later on. Anyways, but using that same, what I just explained to you, how to use parabolic SAR, basically when the dots are below, you're buying, when the dots are above, you're selling. Here, the dots flipped for a sell, indicating, okay, people are beginning to sell again. Even here, people were beginning to sell again, but then the dots flipped again, but only for a short while, only for a few days, because each one of these candles is a day. So what's that? Like 3, 6, 12, probably 6, probably like 12 days right there. 12 days, it kind of went up a little bit, but you can see the dots never really stretched out. You can see when momentum really is building up, the dots, they separate. They're not close to each other. So when you're seeing this, it's most likely going to flip on you and it's going to go in the other direction. Anyways, that's what happened. That's what happened last time. And people sold like crazy. And what did it do? It went down, it dropped 23% from the high, and then it continued to drop, went to 38%, then it hit 50%, but this time, now it's done it twice now. It's done it twice now. We're really looking for a short now at this point. It's hit 50% twice now. And like I said, the moment it hits that 61%, it's a definite sell. And I say that with like 90% guarantee. Anytime you see it drop below 50 and hit that 61%, just start looking for shorts. It's definitely going to happen. Also, on top of that, hitting 50% twice, you're definitely looking for sells. And we can see we hit 50% twice now on this parabolic SAR. So now we're looking for shorts. Now we would be flipping our Fibonacci sequence in the opposite direction. Anyways, you can see it dropped to 50%. It pulled back up to 38%, never got back up past 23%, and then it continued to drop 50%, 61%. This is the moment where it's a lock, it's a sell. And then you could have utilized, say, the parabolic SAR at this moment where it hit that 61%. This is our 61 line right here. So say we hit our 61 line, boom, it was in a short. We missed that first entry right here where it flipped and we would have trailed the stop loss. The way you want to use the parabolic SAR is a continuation pattern. So here we would have hit our 61. We would have been like, all right, cool. On the next flip, we're going to enter the short. Boom, parabolic SAR flips. We enter our short right here where it flips. We use this as our stop loss. We trail it, trail it, trail it. We get out of the trade. And what did it hit? It hit that 78% range. Boom. And then from 78, obviously, it never went all the way back to where it started, which is great for us because then now we're looking for it to continue back up and break new highs. Anyways, this Fibonacci sequence is now over. We're done with it. At this point, it's cooked. We took this trade, we're done. So now we would start a new one. So let's get rid of this. And now let's start utilizing it to take trades in the future, like most people don't do. Or I'm sure there's people online that have done it, but it's just hard to find videos. Anyways, so let's start our fib from the beginning of the bull run. And let's move this out of the way so we can see what we're doing here. And let's put this at the peak. And let's start trading it from where it's at currently. So the same way we traded the last bull run, we utilized the Fibonacci levels. We're going to do the same thing here. We don't want to see it hit 50. If it hits 50, we're going to start looking for shorts. We want to see it stay above 50. Honestly, we want to see it stay above 0.38 to just continue this bull run. And if we analyze it from all the other previous levels, we can see, well, I don't know, I haven't tested this, but I'm sure it never drops below 50 from any of the points. So for example, say we started from the beginning and we started recording this. Right here at the beginning of the bull run, it did hit 50 here actually. 61 is right here, 50 is right here. So it hit it, but then it immediately left that. So 50% of people sold when it hit 24,000, but then immediately people started buying it at 20,000 and it just shot up. And this is a good indication that it's going to continue. Now we created this new high right here. So if we would have measured that out and we look at it, it never hit 50 again. It stayed above 38%. So that's a good indication it's going to continue. So say we kept measuring it and then boom, it created this new high. Did it hit 50? No. And look, we're keeping this here because that's the beginning of the run. So we're going to keep going. We're going to keep going. Now we're at this point and we're at 23%. So now we're going to start utilizing the parabolic SAR in our trades. So let's stretch this out. We're looking for it to continue up, but we want to enter somewhere up here where it breaks it. And this is how we're going to determine when we're going to get into the trade. So let's play this out. Let's fast forward time. Right now, so another thing people like to shit on are patterns. But if you have a trained eye, you can start noticing patterns. Like here, I kind of see a W forming right here. Those form a lot in the market. Uh, I'm sure we'll probably see it form out. You can see, yeah. And typically, like I said, it's going to use those Fibonacci levels. So if it did bounce and make that W, it would probably make it off the 23% or the 38%. We do not want to see it hit 50%. Hits 50%, we're looking to short. So let's fast forward time a little more. Okay, it's getting dangerously close to 50% though. Let's see, does it ever hit it? Move candle forward. This is daily. If we click it a few times, let's just drag it. It never hits that 50%. So perfect. It bounced off that 38. So we're going to keep watching it. So this is how you use the fib. This is literally how you use the fib. And you want to see it, or you want to wait until it breaks above the previous high. And we're going to also use the parabolic SAR in conjunction with the fib, and you're about to see exactly how. Okay, so everything's looking good again. Things are staying at the high, above 23 now. It's moving up smoothly. Ooh, okay, before that happens, let's start utilizing, oh, right there, you can see right here would have been a good entry. So right here, this is how you would use the parabolic SAR. So say we go back a few days. Let's go back. Why is it going back? I don't know if it's up there. Okay, cool. Okay, right here. We have our SAR flipped right here. So we had good momentum going to the upside. SAR flipped for a short. So would we take this short here? No, we wouldn't take a short. What we want to see is for it to continue this momentum. Maybe it pulls back a little bit, and then it breaks the SAR again. And that we see these, and that's where we would enter because we had good momentum. it flipped. And then if it continues and it flips again, that means the momentum is still there. So we would set up our trade. We'd be looking for a long position here. We wouldn't have a stop loss yet. Our profit target, we wouldn't have because we would be using the parabolic SAR for our profit target, but we would be waiting for it to get broken. And right here off this candle, we would have been following it with the parabolic. So the way you would move your trade, so this trade would stay with this dot right here, would stay right here with this dot. So as the dot moves down, our trade, our limit order, our long order, we would move it along with the parabolic SAR. So we can see here, boom, our long order gets striked, momentum continues, it goes past the previous high, and we would trail our stop loss with the parabolic SAR. So now this is our stop loss. So currently our trade could still get stopped out because we don't have a take profit yet. We would just keep moving it with this dot here. So if we keep going until the dot gets struck, and as you can see, it still hasn't gotten hit. Keep going. Let's see, it should load, boom. It would finally get hit at this point right here. So now if we look at it from a distance, we can see how nice that trade was. We took a trade from what? 73,000, take profit 93,000. All just using the parabolic SAR and using the Fibonacci sequence. Now, in that same method could have been applied back here as well. Every time it broke these highs and these parabolic SARs would flip, like here, for example. I'm sure if we drew a fib from the bottom here to the top, we'd see this momentum continue, boom, 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 boom. Even here, oh my gosh, this would have been a great trade if you would have noticed that the parabolic SAR got struck here. You can see that little dot right here. Say you were watching the market and on that day you saw things flipped and you were like, all right, it's already at a high. If it breaks this again, momentum's going to continue up and then we'll use this as our stop loss. You could have done that, boom, caught this nice trade from here all the way to here. And then even doing the same thing again, like, oh, okay, if momentum continues here, we enter our trade here, stop loss down here, trail it, trail it, trail it. Now, at first, this was looking not that great because as you can see, there isn't much of a gap in between the parabolic SAR here. But as you can see, it played out nicely and you would have caught quite a tremendous gain off of that all the way here before the parabolic SAR got struck by this huge candle where it pulled back. And then, sheesh, continued again. That would have been another crazy trade if we would have taken that. But if you would have been using the parabolic SAR as a stop loss, you would have gotten stopped out right here. So it wouldn't have been that great. But you manage your trades differently depending on the situation. This is a very simple strategy that I'm explaining to you. And the way you want to build your strategy is mixing up these different formulas, these different math formulas, and figuring out what works for you and what you understand best. So let's go to modern time now. Let's go to modern day Bitcoin, which is currently here. So let's get rid of this trade here. Let's pull up our Fibonacci all the way to the top. Let's get a good reading of what we think is going to go down now. So we have this high. So things are still looking great for Bitcoin. As you can see, we're still riding above the 23, but we're still well above 23%. Nobody's really selling. Things are great for Bitcoin right now. And in fact, we could see another bull run potentially soon. So yeah, look out for that. Now, right now, we're in consolidation, kind of like what was going on here. We'll see what happens. Now, if it starts approaching this high, we're going to start looking at the parabolic SAR, waiting for that flip. We want to see momentum push up. We want to see some momentum push up near the near the previous high. And then we want to see a pullback that doesn't last very long. And then another break of the parabolic SAR at the high. And that's where we enter and we use that as our stop loss. And then we take the next trade to that next price level, which could be, 140,000 potentially, maybe even 160,000. So, that's all I have for today. I think I'll make another video on explaining the parabolic SAR more in depth. If you have any questions about the how to utilize the Fibonacci sequence, please ask. And I know we were looking at it on the daily time frame. That's honestly the best time frame to use the Fibonacci sequence, but you can use it on lower time frames. And maybe, I'll put out a video utilizing it on lower time frames if you're more of a scalp trader, because you can utilize it doing it that way. Also, you can utilize it on pullbacks, say trading these pullbacks when it does drop to 23%, and you say you want to enter at 23% of a pullback just to catch that, I don't know, just a couple of pips or whatever, just because every time it hits those certain levels, there's typically a pullback or a response associated with that. Anyways, that's all I have for you today. I hope you learned something new and, utilize these in your trading strategy, see how it does for you. Thank you for watching. Keep on trading.